Tax season is upon us. If you want to buy a house this year and you think I'm going to use my tax refund to do that, that is a great option and you need to get started now. Tax refund money does not have to be seasoned, so as soon as it hits your account, you can use it for your closing costs. Timeline wise, you'll do your taxes February, March, maybe get the deposit a few weeks after that. So getting pre-approved now, start house shopping, get in contact with your realtor is a great time to start now. If you have any questions on things, as always, hit me up.
Hey guys, welcome back to the channel. She's right. Tax season is upon us, and I don't disagree with anything that she said as far as how to use your tax return if you're going to do so in purchasing a home. However, I want to caution those of you, you know what? Let me quit being politically correct. You don't need to use your tax return to buy a house unless you have certain things in place. That is the nature of the video. Everything that she said is correct. However, I want you to watch these next videos. If you're getting a tax return and your mindset is to buy a house, we need to make sure certain things are in place so that you can keep the house. The goal isn't just to get in, the goal is to stay in and have it be a blessing for you while you're there for you and your family. Hi, my name is Robert, and on this channel, we simplify the home loan process. So if you're getting an income tax or you're expecting one and you wanted to buy a house, please watch this video to the end so that we could get you to think about some things that you might not think about otherwise. Check it out.
It's almost tax time, and I know a lot of you are going to get a refund back. What do you do with that refund to set yourself up in the best way? Let me tell you. These are just ideas, and the amounts that you contribute to each one can vary based on how much you get back. But here's what I suggest that you do. Number one, you need to immediately put some into savings. Put it into a high yield savings account. And if your tax return is like $3,000, $4,000, $5,000, take $1,000 automatically and send it to your high yield savings, or even $2,000 to start your emergency fund. Okay. A high yield savings account. If you don't know what that is, go to my page. The high yield savings account that I recommend is Ally or Wealthfront. I use both of these personally, but there are a ton of them out there. Number two, if you have debt, send some money to pay down your debts. You should already have a snowball or an avalanche debt plan for yourself. If you don't know what that is, again, go to my page. I have videos about it. Create that plan for yourself and start working on that first debt in the list. Again, the higher amount that you can send to your debt, the better. I would recommend you send like $1,000 to this. Number three, invest in yourself. Invest in something that is going to take you to another level, that is going to improve your life. So don't be afraid to invest in online courses, different education for yourself, different courses that are going to help your skills that you want to achieve, etc. Hopefully you already have some goals about what you want to achieve this year, and online education can seriously be a great way to meet those goals. If you're going to invest in online courses, which don't be scared to do this. This is the way that the world is moving towards. I've personally invested thousands of dollars into courses for myself. Just make sure that it's somebody that you trust and somebody who has gotten results that you yourself want to achieve. So make sure that everything is good before you purchase the course. And number four, set aside some money to treat yourself. You deserve that. And it is okay to spend money on yourself. You do not have to spend every single dollar on courses and saving and debt. Give yourself some fun money. You earned it. Go get your nails done. Go get your toes done. Go shopping, whatever you want to do. Go get a massage. It doesn't matter. Okay. Just treat yourself.
Excellent advice. I love what the video recommended for you. Let me add a couple of other things. Let me give some context. Your debt and your reserves, two very key things when going into home ownership. I will say this. If you have any of the buy now, pay later accounts, Klarna, Affirm, Afterpay, and all of the other ones that are out, you strongly need to reconsider owning a home, because the behavior, respectfully, is you're spending more than you're bringing in. Thus, buy now, pay later. Either you don't have enough money with what your current income is, or you may have enough, but you're overspending, which indicates you need a budget. I'm not a betting man, but I would bet most of you don't have a budget. How do you make a budget? It's real simple. Just like we simplify the home loan process, I'm going to simplify budgeting for you. Go back 3 months, get your bank statements, wherever you're transacting, and it's real easy to track now because most of these things are electronic, digital. Go back, don't lie to yourself. You and your partner, your spouse, you got to sit down and go through the spending and see where the money's going. Because remember, you live on the net, not the gross. And then once you have ascertained where the monies are going, now you can work on those reserves, and a refund, a cash infusion that you had either forcibly set to the side because you paid too much into the system, or you have a lot of kids or what have you, and your income is a certain amount, and you're getting this cash infusion. This is where you start changing the narrative for you and your situation going forward, so you can start controlling more of what happens to you. Identify those things. And then once you have those numbers, 50, 30, 20, those are the expense ratios. 50% for your living, 30% your spending type things. And then 20%, you can have that go towards your investing or your future self. However you want to put it down. I just like giving you a 10,000 foot view. And these are some of the methodologies that people speak about. But the good thing is this: you don't have to follow what someone on the internet is saying as far as how you allocate the money. But the gold in the advice is knowing your information. So now, if you have these things in place, a reserve, 6 months of your expenses that you know that are happening with real life, and you have some savings or an investment somewhere, and you spent some money on yourself, now you can consider buying a home with this tax refund. Now, with that said, check out this next gentleman because he's going to add on to what we just spoke about. Check it out.
Make sure you're utilizing your tax return wisely. When it comes to owning a home, the biggest thing that people stumble upon is their finances. Getting your tax return allows you to have some money to be able to put towards your down payment, your closing costs, or any other costs associated with purchasing a home. Another thing that people struggle with is their credit. So you can utilize your tax return to be able to pay down some of your debts, to be able to pay somebody to be able to help you get your credit score to where it needs to be able to purchase your next home. The terms of your loan as well as your loan type largely depend on where your credit score is. You can get pre-approved for an FHA loan with as little as a 500 credit score, but at that 500 credit score, you will need to put down 10%. The interest rate won't be the same. It's a very risky loan to lend at a 500 credit score. Once you get to a 580, that's when terms get better. You can put down 3.5%. Again, interest rate won't be as favorable. Once you get to a 640, that's when things start opening up as far as better terms, as well as program help for down payment assistance, especially if you're a first-time home buyer. For a conventional loan, you need to be at a 680 or above, but for the best terms, be at a 700 or above to be able to get a conventional loan with the best terms for you.
Let's unpack what he was saying. Just some tweaking. The biggest issue, especially today with home ownership, are the carrying cost, the maintenance, the taxes, and the insurance. All more the reason to make sure that you have those things that we aforementioned in place, because taxes and insurance are going up. Those are the two parts of your total mortgage payment that you don't control. And the argument is this: you need to understand now before you get into a home if you can handle the increases in taxes and insurance, because it's no joke. And this will prevent you from making a bad decision. So although with FHA at a 500 minimal credit score, if everything is in place, you can get a home. The question is, should you? Because as he stated, the lower the credit score, the higher the risk, the higher the interest rate. You're going to be paying more. I would rather you take your tax refund and make sure all the things are in place in the beginning. Your credit, let me pause on credit. I don't mean to offend anybody. 680 is bad credit. You need to be shooting for 720 or higher. Well, how do you do that? You pay your bills on time, all the time, every time. Well, that sounds snarky. I'm not trying to be snarky. The way you're able to pay on time, all the time, every time is you limit the amount of debt that you get into. If you don't have the bill, you don't have to pay it. Therefore, you could pay it. Your money goes further because inflation all of these free checks and money that's being printed and stolen and all the stuff is eating up your buying, your purchasing power. I digress. The question is, should you buy a home? Now, if you come to me, because I'm a lender, NMLS license number 180100, you may have a scenario or circumstance like a catastrophic medical event that happened, and those medical bills are preventing your credit score from going higher, and you want to lock in your most expensive line item, your shelter, your housing costs. I get it. There's an FHA loan for you. But if you're just someone that is a bad steward with your credit, that is something that you have to address, because that behavior is going to bite you when it comes to owning a home, because you're not going to change the batteries when you hear it. Chirp, chirp, chirp. See, to me, when I hear that, that's someone that is not a homeowner, because when things happen with home ownership, you have to deal with them. And most of us can't deal with them because we don't have the money. I digress. So again, the question is, should you? And I like where he's going, because he's going with caution, but I like the first video because the goal with home ownership is generational wealth. That means you have to be able to keep it. And keeping it, you have to maintain it. And to maintain it, it costs money. It's not doable. It's doable, but we have to quit being immature when we buy. Here's the last thing I'll say with this gentleman before we move on, because this next video really breaks it down for those that have the things in place that we're talking about. But when that income tax checks come in, the thing is, don't lie to yourself. Look at your numbers. Don't worry about what everybody else is doing in the averages and the percentages. Do you have a reserve in place? Meaning minimum 6 months of your actual expenses now. There's somewhere to where when life happens, you can touch those things. And 6 months should be plenty of time for you to pivot and get into another position where you can take care of yourself and or your family. And then, are you investing either in yourself personally to continue to grow your skills so you could be productive and attract new opportunities, new monies to keep up with inflation, because inflation is real. So hopefully that makes sense. Let's check out this last video, because I believe she hits it on the head with the assumption that everything is in place. Now I'm getting this lump sum of money coming in for income tax, and I'm really ready to buy. Listen to how she's saying that you should go about it, because I think I agree with her the most.
If I was getting a tax return back in January or February or during tax season, here's exactly what I would do to make sure I could use some of that money to buy a home. Watch until the end. Step one, I would take at least $3,000 and put it in a savings account in a real bank. Stop using Chime and Cash App. I want you to go get a new bank, a real bank, put it in a savings account. Now, while we're doing that, I want you to know that we may not even need to spend that money, but the lender is going to look at you as a more lendable homebuyer. Makes sense? So imagine they have 5 applications that come in. 2 of them have no checking account, have no cash, have a 620 score. One of them being you have the 620 class score. You have $3,000 saved and you've been on your job for 2 years. Which one are they going to give their money to? Going to give the money to the person that can show that they're saving money, that they're lendable, that they have cash saved, aka reserves. I would put that in a checking account for 4 to 8 weeks. I want you to understand that what you guys are paying in rent right now is this close from a mortgage. You might as well buy a home. In 2026, a lot of y'all's rents are about to go another $175, $150, $200. You need to start having honest conversations with yourself and your family about buying a house. Step 1 is going to be about putting that tax money in a checking account so that you can show reserves.
I agree with her 100% as it pertains to your housing costs going up. And as these years continue to go by, Lord willing, we're all still here and the system is working, rent is going to continue to go up. Here's the deal, and you guys do the research. The millennial group of people, cohort, generation, is larger than the baby boomers. And that was a whole lot of people. So you have a lot of millennials, all right, that are going to need shelter because they're making babies and moving on or forming new households. They may not be purchasing or controlling their ownership, because you guys get upset when you say owning a home. For all of those of you that want free money and don't pay any taxes, that's typically who that is. Yeah, and I'm throwing a shot. I digress. But that renting versus owning argument, we'll call it controlling. For those of you that don't want to control that, you're going to be beholding to increases in rent because inflation is up. Everything is up. Your last hamburger you bought, that used to be $6, is $15. It's inflation. Your buying power, your purchasing power is not the same. That's why we hate inflation. You have to get into things like shelter, real estate, even residential. It may not be cash producing real estate, but the appreciation is going up. Just got to get in the game. If you've owned a home, any of you that have owned a home from 2015 to 2020, get in the comment sections and let me know if the paper value of your home has gone up. And a lot of you out there like looking at the equity potential. It's called the wealth effect, but you're not wealthy. So don't get it twisted. I'm not telling you to feel some kind of way, but it's a game. You got to get in the game and understand it. Asset holders. Have you seen gold, silver, even some of the cryptocurrencies? People are putting their monies into those things. And so if you don't have $92,000 for a Bitcoin, you can still leverage, borrow money with a little bit down with a home loan, because shelter is something that everybody needs. As she was saying, those costs are going up. But what she's talking about also with some of these online accounts, I see it all the time. Affirm, Klarna, Afterpay. You all don't even know what you're paying because those are individual loans. You need the loan documentation, the truth in lending for each loan that you get. And when I ask people for that, the issue is this: you don't know where it's at. So if you don't know where it's at, you don't know how much you're paying. We got to get back to knowing, because knowing is half the battle. And you turning a blind eye does not mean that it's not affecting you. It affects all of us, positively or negatively. So I like a real bank account, or an account where you can get to your statement so you can track what it is that you're doing. There's no mystery why they want it convenient. Real quick, don't think about it. We got it. The more convenient it is, shout out to the homie Kai, the more captive you become. You become a slave. So we got to get back to minding, hoeing our road. It takes work. Got to stay on top of it, especially nowadays, because so many people are at you. That's why some of us need to turn some of these things off, and your life will be better. You can focus. I digress. Last thing I want to hit with what she's saying, there's a myth out here that if 5 applications come in and 2 have these things and 2, here's the deal. Lenders want to lend money. They're in the business of lending money. You know why? Because your debt, my debt, is someone else's income. This is a debt-based, a consumption-based economy. So they want to lend you money. And I've done loans for folks, with people with the 500 credit score, 620, 640. The lower you are down on the risk index, the more money you pay. Poor people make the world go round. They pay for everything. I want you to not be poor in spirit, nor in this life. And it requires you to humble yourself, to listen to the right source, and then you got to implement. Faith without works is dead. You feel me? So I'm finished preaching. Hopefully you've learned something from this video. A tax return don't make it a homeowner. The tax return can give us a house, but you not paying your bills and maintaining it and understanding the increase can take it away. That's not what we're doing. If you like how I get down and you say, you know what, I understand what you're saying, we resonate, and I'm wanting to get onto the property ladder, well, I'm a lender. My NMLS license number is 180100, and my contact information is in the description of the video below. Reach out. Let's have a conversation. My time is up, but I thank you for yours. As I always say, guys, let's be good to one another. Let grace abound. Watch these next 2 videos over here. They'll help you on your journey. And until the next time, indeed, y'all stay blessed.